And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. It's Thursday, February the 24th. I'm John Hoagland. Thanks for trusting me with your time. Well, it's apparently war. Russia has invaded Ukraine, several cities in Ukraine targeted by Russian missiles. Don't want to get political, but apparently our feckless president has vowed the U.S. and its allies would respond decisively to the unprovoked and unjustified attack. I'm just a guy, not even a particularly smart guy. All I think about is those people and how sickening and sad I feel for this whole situation. Shouldn't be happening, and unfortunately, this is where we are. The markets are, of course, reacting violently to the situation. Whenever we have volatility, I just try and remind myself that I'm going to be doing myself a huge favor if I increase my level of patience, if that's even possible. And if anybody has a strategy to trade these markets, please send it to me. Context and risk management are going to be very difficult to come by in the coming days and perhaps even weeks. All we really can stand on is that risk management to manage our risk and to try and remain patient. We had a lot of economic information this morning. I don't know if any of it's going to help. We were looking for a 0.1% uptick in GDP. This is just the preliminary GDP. It's not the actual number. They were looking for 7.1%. They got their 7.1%, up from 6.9%. Jobless claims were lower. They were looking for 235,000. It came out 232,000, 17,000 less than last week's. And the continuing jobless claims also lower. They were looking for 1.58 million. It came out 1.476 million. We're still waiting for 9 o'clock numbers, the new home sales, 9:30, nat gas, which we see has also been lurching to the upside, as well as crude oil, which the petroleum status report is due out at 10 o'clock. Stocks are going to be opening sharply lower, as I'm sure we're all well aware, deeper into correction territory. Crude prices reached $100 a barrel last night for the first time in 8 years. The VIX up 20%, 37.28. Dollar index up 1%, 97.19, heading towards its 52-week high. The yield on the 10-year lower at 1.86%. As we go towards the flight to quality, we see gold screaming, we see our treasuries screaming to the upside, and we see our stocks heading to the downside. As always, try and stay patient. Keep praying for us all, and please, God help us all. I got to say good morning to everyone this morning. It's a strange morning. It's a very weird feeling. I'm a little bit nauseous by the things that we're seeing, and again, I'm just going to try and remain hopeful and keep praying that there's a peaceful outcome. Brian, you were the first one in the room this morning. You win the prize, Manuel Caesar, Shaw Spencer. Buckle up, Buttercups. Yep, gaps everywhere. Yep, Janus, Frederico, Alessandro. Good morning, Frederico, Isaac, Spencer. Yeah, not an invasion is underway, it seems. You're right about that. Isaac, good morning. Mirek, Bill, Zerain, Ryan, Rusty Golfer, Jay Crockett, good morning to you as well. Hello, Terry King, Deanna, good morning. Janus, We know what's going on with those dictators, right? Everything is all about power for themselves and nothing for everybody else, it seems. Jeff, good morning. Robert Kennedy, produce, perspire, and persevere. That's a great name. Thanks for popping in and saying hello. I don't think I've seen that before. My brother Rick, I love you. And Brody, good morning. Unfortunately, history being made as we speak. I was just thinking about that date, and I hope this date does not become one that lives in infamy. Sarah Hall, a fine dawn morning to you. Laurel McLaren, good morning. Charles, yes, it's a sad morning. Scott, Kirill, hometown under fire this morning. I am so sorry about that, and I'm praying for the safety of all people and your people especially. Strategy today, cash is a position. That is correct. I'm going to be extremely cautious this morning, trying to remain extremely patient. I'm well aware I'm going to miss a lot of big moves. I just don't want to get run over by trying to get into those, get into trouble. I want to make sure that I'm here to play long after this situation is over. Trading research, appreciate your comment there. There's a million ways to look at every situation. My only hope is, why can't we just be peaceful? Dan Trader, good morning. Rob T, good morning. Devont, Three Lions Insight. Vince, good morning. Rob T, Dr. VJ. Adrian, Casey J, good morning. Sarah, yeah, it's not good news. Saddening situation. God bless everybody, of course. Ngabo, of course. Charles, opportunities everywhere, it seems. Unfortunate for the catalyst, yes. Is it best not to trade, Jack? Sitting on the bench today, Charles. Jack, it's a question you've got to ask yourself. I've been, in and around markets for coming around to 40 years. I thought I'd seen pretty much everything, but, this is something I have not necessarily seen. We've seen war, we've seen conflict, we've seen, all of this. It just seems different today. That has me thinking there's going to be big opportunities. Of course, there's going to be big opportunities. There's also going to be big risks. So ask yourself, Jack, have you seen markets like this before? Do you have a strategy to operate in markets like this? It is, the markets are different today than they were yesterday. Of course, we know that there's a lot of movement. There's a lot of more uncertainties. It's just, the uncertainties just keep seeming to pile up. Energy prices, the southern border, the economy, stocks. Now we've got a war between Russia or a war from Russia on Ukraine. It's just, think about, have you experienced markets like this? And if you haven't, be very, very patient. Markets, when they're moving like this, have a tendency to bully us into taking trades just because we think we see something or think we see an opportunity. And it's been my experience. I've done both sides. I have been very active during highly volatile periods of time, and I have learned over time that it's better to be patient, wait, stalk the market like you're waiting for a three-legged gazelle, and then strike. Be patient. Wait for some sort of structure to develop, to give you that opportunity. First, to limit your risk, then to look for potential profit opportunities. Rob T, I feel the same way. It's almost like we're benefiting from other people's suffering. And I felt that way in the past. I felt that way after 9/11. The markets were basically closed for a whole week, and we came back that Monday, and the markets were crazy. Everybody was standing there, and people were making boatloads of money and really not feeling that good about it, but somebody's making the money. Somebody's going to be taking your money away if that is the case. Lacey, chill, girl, chill. Girls are walking. People are walking by with their kids and their dogs, and she wants to be out there with them. You can hear her whining. It's okay, girl. I know. It's okay. We'll get out there. We'll get out there soon. All right, girl. Johnny boy, remember these days in the pit? Yep, I sure do. Sure do. Good to see you, John Wilkowiak. Rick, I was on the floor during the gold during the Falkland Islands. Gold was limit up for days at a time. Yeah, you really do have to change your perspective because the markets have changed. Once we say it, I say it all the time. Once you have the right answer, the market's going to change the questions. And that certainly is ringing true for us today. Jack, you're welcome. That's what trading is. Anytime you're making money, someone is losing it. And that's true. And, that's if you don't want to box, don't get in the ring, basically is what that means. It reminds me of that scene from Pulp Fiction when Bruce Willis jumps out the window after his boxing match, and he gets in the cab, and the cab driver, who happens to be Quentin Tarantino's actual wife, asks what it's like to kill a man, and he didn't even know that he had. She heard it on the radio, and he says, "You want to know what it's like?" Well, if Floyd hadn't gotten in the ring, Floyd would still be alive. He was there. He knew what he was risking, and that's it. Right. Yeah, you're right, trading research. I mean, you have people like doctors, making their living off of people being hurt or having disease. There's nothing wrong with it. It just sometimes feels a little bit strange. Long six bigs that whole week of 9/11. Oh man, John, I remember I was on vacation with my family in Myrtle Beach, and that Tuesday, it was awakened by my father-in-law actually coming into the place and saying that a plane just hit one of the World Trade Center towers. I was like, what? So we were there. We were scheduled to fly home on Saturday. We actually did end up flying home. So I was out of town that whole week. I wasn't even on the floor that morning. All right, put me in, coach. Ready to rumble. All right, Lee. Devont. Zed's dead. Yup. It's not a motorcycle. It's a chopper. All right. Enough of my yammering and chit-chat. Let's take a look at what we're seeing in the markets here. I'm going to start with the daily in the S&Ps. Let's take a look. All right, there's a lot to talk about today and a lot of big opportunities and a lot of big risk. Bear market correction territory. We're approaching 15% off the highs. This is the continuation chart. There's our 15% level. We're way past that in the Nasdaq. We're approaching 20% off the all-time highs here. Some of the swing levels that we might be looking to target from way back in May here. This swing low is 40.29. That's May of 2021, almost a year ago. We were down here. Risk is huge. Do you have the experience to address these markets? You are in the markets environment. The markets environment is particularly hostile. Short time references, short time levels are going to mean nothing. Here's the 30-minute chart. We were talking about big gaps. Well, we got a big gap here. We also had a little bit of a late spike. So if we open in or below the late spike, that's acceptance of lower pricing. We're starting to set up a little bit of structure here. We've got some consolidation here. Our overnight low and this swing high look like interesting areas for an execution early in this session. We're out of balance. We're out of range. the opening range trade may actually be something we might be thinking about doing, because we've got a whole lot of shorts in this market in the overnight, whole lot of overnight shorts. But the market, again, is news driven. What is going to happen next? Seems like we're getting news and information almost on a minute to minute basis here. So keep your eyes and ears open, protect yourself, always wear a stop, and be patient. Look for when the market says, here's your opportunity. If you go looking for trades today, you'll find a lot of them. Shannon, will there be restricted trading around price limits today? For funded traders, there will be. You get down to, well, I think the first limit is 7%. You get down 5%, we're going to be looking for you to get flat. Yeah, you're right, Trading Research. I mean, the fact that we're all here responding to these markets should help the liquidity and should help some of the bigger moves be a little bit smaller. This overnight move, there wasn't a lot of participation in. We see the big move. Now we've got a little bit of area of balance here with which to kind of look for opportunities at those extremes. Opening range trade, maybe. Take a look at the crude oil now. We've established our opening range. We were talking about the fact that this upside auction was appearing to be a little bit tired. Volume wasn't all that great. We weren't getting some really good momentum. We were trying to push higher, but seeming to struggle with that. We even struggled with it yesterday. And now we've got new life. We've got new business, new participants, new buyers coming in and pushing price back up around $100. June 2014 swing high, $107.68. That's the next swing high that I see that we could possibly be targeting. It's not that far away, folks. We're already, $7 off the low from the session. It's $7 to that level. Headline driven market again. Little structure may or may not help. Take a look at the 30-minute chart. We're going to be talking about gaps. We're going to be talking about overnight inventories. Settlements all the way down here, 92.10. We're trading 99.35. All of our overnight inventory is to the long side. Does this offer us an opportunity on the opening range trade? Here's the first minute. This should be a lot thicker. So opening range 99.30 to 99.66, 36 ticks. We've just taken out the low of the opening range. We took out the high of it. Now we've taken out the low of it. The opening range not necessarily being all that fruitful for us here this morning. So here's that first minute. We looked above, failed looking down below. Remember, we do have a lot of overnight longs in this market. If they don't find what they're looking for right away, which would be continuation to the upside with new business coming in the regular trading hour session, we may see a pullback towards a gap close, back towards settlement. I don't see that necessarily happening. This is a huge gap. And if we can't close that gap relatively early, I will continue to look for opportunities to look for longs on weakness. So we looked at the S&Ps, Nasdaq is largely the same notes. But again, we are past 20% off the all-time high. The market continuing to establish weaker levels. Look at the continuous. The 50 and the 200. We got the death cross coming today. Seems like the death cross is always a little bit late to the party. But there it is. We just did a Coach's Playbook about the death cross a week or so ago. the 50 session simple moving average crossing under the 200 session simple moving average. Take a look at the 30. Overnight inventory is short. Overnight inventory short. Gap rules. Can't close the gap relatively early. We look to sell strength. Again, this is headline-driven news. It's random movement sometimes. It's big risks, small rewards. Fred's asking a question. If we're technical traders, should we be trading fundamental headline-influenced markets? It's a really good question. Fred, my answer to that is, have you traded markets like this? I know most of us were probably around for the COVID markets. That was volatile, that was down, that was big, that was, some pretty big opportunities and some pretty big risks. How did you fare during that? Were you able to find levels using the market profiles to give you the opportunity to limit risk? I'm only looking for opportunities by the amount of risk I have to take to get in them today. If they go my way, I'm pretty sure they're going to take care of themselves with the volatility we're currently experiencing. All right, so yeah, often a great contrarian indicator for a short time frame. Pop, the death cross. You're right. I mean, by the time the death cross happens, we're probably pretty short in the hole. All right, so overnight inventory short, big gap, can't close the gap, look for continuation to the downside. It's I feel like almost a broken record, but that's all we really have to lean on this morning in short time frame is the overnight inventory and whether we close those gaps or whether we don't. Here's gold. We've been talking how healthy this upside move is for 2-3 weeks now. We've been seeing delta divergent direction. This is longer time frame buyers. It's been supported by increases in open interest. Yesterday, we had another 6,400 contract open interest increase, telling us that there's still money coming into this market. We have the events that occurred last night. We've come to a flight to quality type of situation, and we got what we were looking for, and that is a new participant in the upside auction. Ladies and gentlemen, there is a new participant, a new bidder. This market has been strong and is still strong. Is it getting too long? Could be. We squeezed a lot of shorts. We've got a lot of money coming into the long side. August 2020 levels, swing highs on the continuation chart. Here's that swing high we're kind of looking at. This is the last swing high. We've taken a look over it. If we continue this swing high right here, that's silver. What am I talking about? I know somebody was really happy about silver and gold. So August, where am I? August 2020, this swing high up here. Now, what about this one? Or what about this one? This is the next swing high that we're looking at potentially reaching. That puts us up to 1992. Above that, that puts us over 2000. And then, of course, our high up here, 2074. There's lots of swing highs to target if the market continues to push that direction. What does it look like on the 30-minute chart? Well, it's a gap. Here's our gap. Here's settlement all the way down here, 1910. We got the market really pushing to the upside. The market now looking for new information. We're starting to set up a little balance. That's what these markets are doing. They're trying to find the levels where two-sided trade can occur. We out of balance all night. We're showing a little bit of sign of balance here. Opening range is neither the high nor the low. Be patient. Look for opportunities at the extremes. Look for the opportunities down here. This was an area that could remain a demand area. We get down there. Find a way to limit risk to get into those trades. I'm looking to the long side because I don't think we're really going to be able to close this gap today unless something absolutely fantastic happens. Let's look at the euro and the last three of our group here. We were stuck back in this previous area of balance. We were here. There wasn't great volume. We can see that there wasn't great volume. There wasn't any really good changes in open interest. We lost 1,000 in open interest yesterday. I had been pretty much back burnering this market because there wasn't any really good opportunity, but now things have changed. The dollar is racing its way towards its 52-week high. The euro hitting the skids. This swing low down here is a potential possibility for us. That low is 111.30 and a half ticks. But again, we're looking at the short time frame here with a huge gap. We've taken out a couple three naked points of control on the way down here in the overnight session. We've come through a previous gap in the overnight session. What's going to happen in the regular trading hour session? I tend to think that these naked points of control and gap fills are better done in regular trading hours. So again, we're looking at a potential area of short time frame balance here. We've been 1, 2, 3, 4, 5, 6, 3.5 hours. We've been in this area of balance. Our overnight low or our regular trading hour session low, very close to our overnight low, looks like an interesting spot. How about the high of this area of balance here? In very short time frame, they can be important levels. Remember, if we're range bound, we're fading extremes. Once we break out and accept outside an area of balance, no matter what time frame, it's a situation that gives us the opportunity to go with that breakout. So we break out of this one, we've got a potential supply area here that could give us another opportunity. But again, these markets are volatile, they are random, they're going to seem to not make sense. And if you ask me, markets make complete sense. It's people that are irrational and make markets look like they don't make sense. Lacey, please. Come here, girl. Come here, girl. 10-year. All right. We on the 30, we were looking at a potential head and shoulders. That's now over. Lacey, come here, girl. Come on, girl. Come on, girl. Come on, girl. I know they're outside and you're not. We'll go. Just chill. So rates drop on flight to quality. Potential market state change here. We've been moving lower over time. Now we've put in a higher low and a higher high now. We accept above weekly kickoff high here, which is that level of 127.01. That can bring forth a potential change in direction in this market. We're well aware that we're going to be raising interest rates. I'm not thinking this is going to be a long-term market state change to the upside forever. I think this is going to be a short-term level of potential support at weekly kickoff high. I didn't cover the Nasdaq. I think I did. Let's take a look at let's look at nat gas. We'll go back and take a look at the NASI. Here's the daily. Okay. We had an island low here. We looked at a potential island high up here that got taken out in regular trading hours. The gap did not remain. With the potential for energy squeezes around the globe, of course, this market is finally heading to the upside again. There's been a lot of questions about why the nat gas hasn't been so buoyant price-wise here in the U.S. when it's so buoyant overseas, and it is a global commodity, of course. So let's take a look at the 30 and see what we can see here. I mean, we know we've got a big gap. We've got weekly kickoff high, was resistant yesterday. We've blasted above it. We've got a big gap, settlements all the way down here, $4.59. And our swing highs, I don't know if we're going to be able to see them here, aren't that far away. Gap rules. We can't close the gap relatively early. We look for opportunities in the direction of the gap, which would have us looking for longs. Look for longs on weaknesses. Don't buy new highs on anything. Don't sell new lows on anything. Find a way to get a pullback and see if you can't limit the risk in getting into a market that's already in one direction. Lacey's asking, yes, the limit down is 7% until it reaches it. Then it goes out to 13% after that. So you do not want to have trades on in live accounts past 5%, a 5% change. Currently, on the ES, we are 2.3% off of the settlement price. Nasdaq, it's really rare when that does happen. The Nasdaq, we are 2.8% off. So you've still got plenty of space downside before you have to be concerned about that. And this is a good way to be aware of the percentage changes. Just put up a quote board. You got your percentage change right on there. There you go, Spencer. You got it. Is it wise to skip today since we're so close to price limits in the markets, Nasdaq, S&P 500? Well, in the trading combine, you don't have to worry about the price limits. It's only in funded accounts when we're going to be at risk if you get stuck in a position down the limit. You're good, Dan. Okay, so really good questions here. Back to we'll go over the Nasdaq here one more time here. We got a little bit of time. So the Nasdaq was very close to what we were talking about in the S&Ps. The death cross is upon us. Here's the continuation chart. We see the 50 and the 200 session simple moving averages converging on the daily chart. That's the death cross. Sometimes you'll get a nice pullback, as one of our participants was mentioning. Here's the daily. We are past 20% correction. We are deep into correction territory. We are deep into potential bear market territory, at least for the time being. We see some good continuation to the downside. We lost 2,800 in open interest yesterday. I would suspect that was for perhaps some longs finally capitulating and getting out. Here's the 30-minute chart. Settlement all the way up here, the 13,507.5, all the way up here. Lots of overnight shorts, but the market has been news driven. We've set up a nice little area of balance down here. That's what these markets are doing. They're seeking the areas where two-sided trade can begin to ensue again, and we've set up a nice little area for us to focus on the extremes. The high here, the overnight low. This high, 13,249.75. If we end up ranging here, waiting for new information, fading these extremes, going short here and long here, could really be of good benefit for us. But if we break out of this area of balance and find acceptance outside of it, then we have to go with those continuations outside of this area of balance. We're holding a lot of overnight shorts. A lot of nervous traders out there, a lot of nervous people. My suggestion is be patient. Be patient. Right? As always. So it's a tough day. Keep praying. think about your level of experience in markets that are in this situation when the world is in this situation. Most of us haven't had the opportunity to really see how markets respond with this. It's a choice you have to make. Be patient. Don't jump at every opportunity that you see on a short time frame chart. We are in long time frame mode here. Short time frame levels are likely just to be ignored today if the longer time frame is adjusting inventory. If you choose not to participate today, use your practice account. Try and be deliberate in using your practice account. Try and actually navigate these markets to turn a profit today. Be a good risk manager. There's so much to learn. So much to learn in days like this. And being, part of it and learning through it and taking the lumps and whatever happens in practice, then next time you're in a situation like this, you can think back to say, okay, I remember I practiced on a day like today and I learned a few things not to do and maybe a few things to do. Denise, when I mention inventory, it's an overnight thing. If price moves one direction overnight, let's just say, for example, in the equities, we had price moving steadily lower, creating a day session gap. That is short time frame, short overnight inventory. Most of our participants that are trading overnight are weaker hands pea shooters like me. They're not the bigger players. So when we have price moving in one direction, like last night, equities all moved lower, we can make an assumption that a lot of our shorter time frame, weaker hands traders are coming into the U.S. market opening looking for continuation in the downside by our longer time frame traders. And sometimes you'll see that those traders don't get what they're looking for, and they create an opportunity for us to take that trade as they all bail out of those shorts and start taking losses. We can benefit from that. It's a great question, Denise. I look forward to talking more about that with you, perhaps tomorrow on the market forecast. And then, of course, you can always come to group coachings, which are Mondays and Wednesdays at 1 o'clock. I always put the link in on Mondays and Wednesdays. So you have the opportunity to come and ask those questions and get maybe a little bit longer, more thorough answers to those questions. All right, I'm taking 2 deep breaths today. Stay humble, very humble. Stay grateful, and stay creative in your trading today. Please take a few moments to pray for all those in harm's way and pray for peace for us today. Be good to yourself, be good to others. Trade well, trade carefully, trade for tomorrow today, and get out there and profit. I'll be in the proverbial trading pit in a couple of minutes here. Don't know what I'm going to do, if I'm going to do anything, but peace on earth. Trade well today. Get out there and profit. And I will see you for the market recap at 3 o'clock. We'll see what other news has come our way at that time. Blessings upon us. Blessings upon everyone.